Welcome to the Intro to Psychology section of the course. When we talk about psychology, we're discussing mindset. Mindset is important with trading. First and foremost, we want to make sure that we come to the markets with a humble mindset. Even if you believe that you're the greatest trader the charts have ever witnessed or the charts have ever seen, you still want to approach the market with humility and humbleness. Because if you don't, the markets will humble you. Now, a lot of times with trading, one of the biggest things that affect our mindset is patience, drawdown, lack of confidence, fear, and greed. When we come to the markets, it's going to test our patience. You have to always remain patient, as well as discipline. If you have a strategy and you have your trading plan, you stick to your trading plan, especially when things are not moving in your favor. And we definitely don't want to get in a situation where things are not going in our favor and we get into this mindset of revenge trading. Many traders allow their emotions to get the best of them when they're losing their trade or things are going against their strategy or their trading plan doesn't appear to be working. Then they begin to revenge trade. If you find that everything is collapsing within your game plan, your trading plan, your strategy, then just get off of the charts for that day. The markets will still be there the next day. So if you come back the next day and you find that you're in the same sort of slump as the day before, then take the week off and you come back the following week. Stick to your strategy, stick to your game plan. Never allow yourself to become in a position where you're revenge trading. Another thing about mindset is over trading. Sometimes you're on the charts for far too long, hours upon hours that is far beyond the amount of time you should be spending on the charts. And you start to get something called chart fatigue. Now, if you have chart fatigue, you're looking at the charts and everything is making sense when in actuality, it's incorrect, right? You're hallucinating, you're seeing the wrong things. That means you need to step away from the charts, refresh and clear your mind. Meditation works, chanting works, going for a run, doing some push-ups, doing some pull-ups, anything that is going to allow you to stay off of the charts and rejuvenate, replenish yourself before coming back to the charts, because chart fatigue is something that's very real. We have to be certain that we are in a mindset that is clear and fresh and far removed from emotions. So when we trade what we see and not what we think. More times than not, what we think is incorrect. Being able to remove yourself from emotions is going to give you the optimal performance when it comes to trading. I can't reiterate this enough. Sticking to your strategy and sticking to your game plan. There might be times you're facing drawdown, right? There might be times that you're experiencing losing trades. But if you're sticking to your game plan, you're certain that you're setting your stop loss. You're certain that your bias is correct. You're certain that you are entering trades with a stop order and not market execution. These are all variables that are going to work in your favor. When we're talking about trading, we want to have the best probabilities for profitability in our favor. We want to make sure all odds that are against us are actually in our favor. So we have these set of parameters put forth to protect us. When we're trading, it's a matter of risk, right? We're taking risks. The only way to minimize that risk entirely is a risk-free trade or not trading at all. But in order to get a risk-free trade, we first have to take a risk by entering the trade. So when you are experiencing drawdown or you find that you're upon this losing streak or your trades are going against you, you should only be taking 2 or 3 trades a day anyway. So there's no reason to be taking a number of all these different trades, taking 2 or 3 trades a day. You want to make sure you're only trading 2 or 3 pairs maximum. 2 or 3 pairs maximum. Why is that? Because if you're looking for setups, right, or you're waiting for setups to come to you. It's a game of patience, right? And you're waiting for these setups to come to you, then you don't want to be focusing on all these different pairs, right? And you want to be able to master something, right? So if you are focusing on 2 or 3 pairs, there's a higher probability of you mastering these pairs as opposed to focusing on 10, 15, 5 different pairs. If you focus on 2 to 3 different pairs, you know how they move, you're more in tune to make sure you're checking the news and the economy that drives those pairs as well. So you don't need to be looking at a ton of different pairs. Focus on 2 or 3 pairs. And if you're new, focus on 2 pairs. In fact, focus on 1 pair. If you're new, focus on 1 pair. If you have a little bit more experience with that 1 pair, you know it like the back of your hand, you know what type of movements it makes, you know what type of wicks it makes, you know the type of pips it can receive in a New York or London session, then add an additional pair if you're comfortable. Because there are times where you're trading a pair, you get on the charts and you're looking for a setup for that day and there's nothing available. So you are interested in looking at another pair. So just focus on 2 to 3 pairs. If you're new, focus on 1 currency pair. Demo or live account. If you are brand new to Forex, you should be trading a demo account. If you are brand new to this price action strategy, you should be trading a demo account. There's a lot of education and lessons to be learned with trading a demo account. I will say, however, the demo account, you're in the mindset where you're thinking, this isn't my money, it's not real money, it's fine if I lose this trade. It's sort of a different hunger compared to if you're trading a live account. But at least take a month to 2 months to trade a demo account. And when you are ready for a live account, maybe just $100, $200, $300 in a live account in order to gain that experience of what it's like and sort of the responsibilities that come with trading a real account. Over trading. Now, a lot of times traders love to over trade. They lost some trades, so they're still trying to trade more. They've won some trades and they're looking to receive more. It goes back to the concept of greed, right? It goes back to this concept of greed. So if you've already won some trades, you made some profits, doesn't matter how big or how small, consider hanging it up for the day. Consider getting off of the charts for the day to come back for another day or even a different session. Maybe you're trading that London session and you made some profit and now you're thinking, oh, I still want to trade some more. Then just get off the charts and wait for New York session. There will be another opportunity arising for sure at New York session. You don't want to get caught in this trap of over trading. You made profits, but now you've put yourself in a position where you're able to lose all the profits you just made. And again, losing trades, right? Depending on how much you're risking per trade, that should be the deciding factor if you should give the trade another chance or if you should be trying to look for a new trade setup or if you should just be off of the charts for the remainder of the session or the remainder of the day. Make sure you have a trading plan. A trading plan looks like I'm only risking 3% of my account for the session. That means I'm going to allow myself to take 3 trades at 1% risk per trade. I'm going to stick to my setups. I'm going to make sure that I define my stop loss in my entry, and I'm only entering a trade that has maybe a break and retest, a range fill, or a wick fill, right? You may even say I'm going to take all 3 setups, all 4 setups. That's also fine. If that's your plan, then you stick to that plan. Whatever it is within these parameters, make sure it's a part of your trading plan and always stick to it because psychology is fundamental to being a successful trader. And a part of being able to curb the variables that come with our psyche is having a plan. Your trading plan is going to allow you a plan B and a plan C if plan A doesn't go accordingly. But if you have plan A, plan B, and plan C, your psyche cannot interfere because you're sticking to your plan regardless of the conditions that occur. We stick to our trading plan. And that wraps up the psychology section. I'll see you in the next section, analysis checklist.